we got here, my friends? All right, I guess we'll go ahead and get started. So good evening, everybody, and welcome back to Walks and Wall Street. Today is Monday, so happy Monday, happy start of the week to everybody. It is February 26th, 2024. It is about 9:20 p.m. Eastern Time here in New York City, and we are currently reporting live directly outside the GM building. Now, to our right is the flagship Apple store here on Fifth Avenue. If we pan a little bit further to the right, you have the iconic, the beautiful, the classic Sherry Netherland Hotel, as we always talk about. And then right across the way is the very famous Plaza Hotel, arguably one of the most famous hotels in the city of New York, right across the street on Central Park South. The exact address is 1 Central Park South. But tonight there's a lot to talk about. There was some interesting action on Wall Street. Obviously, the main piece of economic news that everybody is waiting for is going to come out on Thursday. And that is when the PCE, or the U.S. Personal Consumption Expenditures Price Index, which is just so happens to be the Fed's preferred measure of inflation, is going to come out. Okay, so I think markets will remain a little bit muted. I don't think there's going to be so much volatility leading up to that event. I think the biggest sort of action we may see is towards the tail end of the week, once that inflation data comes in, once everybody understands how to interpret and process that, and particularly if we hear from the Federal Reserve, right? Because the reason why the U.S. Personal Consumption Expenditure Index, or the PCE, is so important is because it is the Federal Reserve's preferred measure of inflation. And as we know, as we've been reviewing and talking about, the Federal Reserve is responsible for setting the pace of monetary policy in the United States. And they do that in one of two ways. Number one, they can manipulate interest rates, which is the Fed funds rate. To quickly review, currently the Fed funds rate is in a target range of 5.25% to 5.5%. So they could keep it there. They could raise interest rates if inflation pressures persist. And if things are looking pretty good and the economy starts to slow down, they could actually cut interest rates to spark economic growth. Number two is they can manipulate the size of their balance sheet. And this is very good for everybody to watch if you go to the St. Louis Fed website. Okay, I'll say it one more time. If you go to the St. Louis Fed website, you can actually see the Federal Reserve's balance sheet in real time. Now, the Fed balance sheet is made up of mainly two components, very important. Number one, U.S. Treasuries. Number two, mortgage-backed securities. When you talk about and hear about the Federal Reserve printing money, this is one of the ways they can provide liquidity to the market. It's by stepping in here, buying bonds, artificially suppressing interest rates, and also helping out with the mortgage market. We'll quickly go over to the equity indices for a moment. We'll take a look at futures. First and foremost, let's look at the E-mini futures contract for the S&P 500. The ticker symbol for that is ES. Currently, the S&P 500 is trading above 5,000, 5,078 to be exact, and we're about 2 points lower right as futures open. NASDAQ 100, ticker symbol NQ, which is the E-mini futures contract in the CME. We're down about 14 points. The NASDAQ 100 is trading at 17,962. And then last but not least, the Dow Jones Industrial Average, or the Dow 30 E-mini futures, ticker symbol YM. You're down about 18 points, trading back below 40,000 on the Dow. Well, we haven't yet breached 40,000 on the Dow. I think we're gonna get there. We're at 39,098. Now, speaking of the Dow Jones Industrial Average, we have some historic and breaking news on Wall Street. Today, Monday, February 26th, was the first time Amazon, ticker symbol AMZN, joins the Dow Jones Industrial Average. giving the 127-year-old index a needed upgrade as it trails the S&P 500. So welcome, Amazon, to the Dow Jones Industrial Average. If you want to see the current breakdown of the Dow 30, you can go to slickcharts.com. Once again, that is slickcharts.com, and it will give you, by weighting, every single company in the Dow Jones Industrial Average. So for tonight's live stream, everybody, we're going to be talking about a couple of things. Number one, potential sector rotation into small cap stocks. The Russell 2000 was up about 1% today. We're going to be talking about microcaps, ticker symbol IWC, which is the ETF that tracks microcaps in the United States. And also, we are going to talk about risk proxy in the United States and globally, with Bitcoin trading above $54,000. Now, I'm at my computer. Let's actually check in on this because we may crack 55 grand as we're doing this live stream. Let me just make sure we haven't cracked 55 yet. I wouldn't be surprised. Oh, we're at 56,000. So yeah, we're on a crazy tear. Blew through 54, blew through 55,000, and now we're actually trading at $56,000. All-time record high on Bitcoin was set at 69,000. And if you want to know the date, we have to go all the way back to November of 2021. I think those highs are going to get taken out. All right, guys, we'll go ahead and get started here. Just a quick and last announcement. If you go ahead and scan the QR code on your screen and punch in your email, you will be signed up to receive our free investing newsletter, which we are going to be sending out this Thursday. Okay, this Thursday. This is what the newsletter looks like. This was our latest issue that was sent out on February 15th, where we talked about the potential comparisons between the 2008 financial crisis as well as the 1929 stock market crash, and how I believe there's no correlation to today's price action. We also do a deep dive into small caps, micro caps. We talk about semiconductors, home builders, biotechnology, and so much more. So if you would like to stay up to date on the financial markets and New York City real estate, go ahead and scan the QR code on your screen, punch in your email, and you will be signed up to receive our Substack we publish every other Thursday. All right, I'm gonna close up my laptop here. I'll say hello to everybody in the chat, and let's get this stream started. Thank you all for joining us on this very warm night in New York City. I didn't even have enough time to get changed tonight. I'm still wearing all my work clothes. So I may be moving a little bit slower than normal. I'm in my dress shoes, so hopefully I don't get any blisters. Anyway, we are outside the Apple Store. Welcome friends, welcome friends. I see Crypto Meme is here. Good to see you. Let me get the QR code out of the way for the team. Hey, Ryan Beck. What's up? Says, what a difference a week makes. What's up, Ryan? Sabrina Fair, always a pleasure. Dutchman is here. Richard Vogel. Jeff, good to see you. Pogo says, Tom, how important is a CFA for investment banking? I'm not too sure. I'm not an investment banker. I have a lot of friends who are investment bankers, but what I will say is if you think that by getting something will help you perform better in your job and help assist clients and make you more efficient, then I'd say do it, right? I would say do it. You know, nowadays, a lot of times people ask questions like, you know, should I go and get my MBA? Should I get my master's degree? Should I go back to college? And because, right, the frame is almost never, hey, I want to go back and learn this skill. Should I get this degree to learn this skill? It's almost always kind of, you know, the prestige of getting the degree or, you know, things like that. So I guess in short, you know, I don't have a CFA, but what I would say is if you think it's going to help you perform better at your job, if you think it's going to give you better opportunities and push your career forward, I'd say 100%. I would absolutely get it. The more knowledge, the better. And I wish you the best of luck. I think you're going to do a really good job in investment banking. Austin City Limits. Welcome, welcome. Lynette Jackson is joining us. Good to see you, Lynette. Thanks so much. Mariana, Texas. Sabrina Fair, Dutchman. John Kelly says, hey Tom, how about that big Roman candle on Bitcoin? Yeah, performing really, really well. Also, Ethereum is now back above 3,000 for the first time in well over a year, 52-week highs. ETC333, what's going on? Rocky Rocks says Google to 90s in a couple months. Patrice 2020 says looking forward to the newsletter. Thank you so much, Patrice. Yeah, it looks like we had a full chat here. I want to thank you all for coming out. Now, thank God, okay, thank God it is finally starting to warm up here in New York City. According to the local news, by Wednesday, it is going to be 60 degrees out. Now, I'll tell you something. If it's actually 60 degrees on Wednesday, you're going to notice a complete difference on the sidewalks in New York. It is going to be, I mean, the city's just going to erupt if it's actually 60 degrees out on Wednesday. There's going to be so many pedestrians, so many tourists out. It's going to be pretty awesome. So, looking forward to that. Now, speaking of investment banking, one of the things that I've been watching, which is actually encouraging, and I've written some notes down here, if I may, because not only do I do this anyway, we're prepping for the newsletter we're about to send out. I see some very, very encouraging action, right? Very, very encouraging price action in some of the more boutique style investment banks, right? So as you know, you could have the bulge bracket investment banks. You could think about the JP Morgan Chase. You could think about Bank of America, Goldman Sachs, and the like. But you also have smaller, kind of more nimble boutique investment banks. We'll sort of name a few as follows. You have Evercore, ticker symbol EVR, as we're overlooking the beautiful 432 Park Avenue. Stunning building. I actually did a full walking tour today of the one and only Billionaires Row, where we pretty much listed every single building on Billionaires Row. And talked about all of the different developers, how tall the buildings are, different units, price points, all that good stuff. So, pretty cool. Houlihan Lokey, that is another sort of boutique style investment bank. Piper Sandler is another one. Now, if you look up the price action of a lot of those stocks right now, almost all of them are trading at least near 52-week highs, if not into new all-time record highs. And one of the things that tells me specifically is that the M&A market, right, mergers and acquisitions, also, we'll talk about private equity later with KKR. It tells me that that side of the market's really going to open up and has been opening up, right? Because if these companies, some of the smaller boutique investment banks, are trading in the new highs, that's the market telling us that the IPO market is going to start to open back up, that the M&A market is going to start to open back up, and just deal making in general on Wall Street is going to improve. Additionally, Jamie Dimon was being interviewed today on CNBC. For those of you who don't know, Jamie Dimon is the CEO of JP Morgan Chase. He was at a major conference, JP Morgan Chase conference down in Miami, where I will be in Miami in about a week. And Jamie Dimon kind of echoed the same thing. The optimism is just starting to grow back again on Wall Street. You're starting to see deals get done. You're starting to see transactions get done. And you're starting to see pretty good pipeline in terms of M&A and even an IPO pipeline, which we'll talk about in a minute. So that's actually very good news for the market in general. Very, very good news. All right, this is the corner of West 57th Street and 5th Avenue. We are looking at the flagship Tiffany building here. This is Tiffany & Co. It is now owned by LVMH, Moet Hennessy. And they just did about a $500 million renovation on the building too. Hey, Carol H, what's going on? Dutchman, thanks for joining. Appreciate it. Right across the street is the Amman, New York, A-M-A-N. This is one of the most luxurious hotels anywhere in New York City. And I believe the rates start at $1,200 a night. Hey, Andrews, is Bitcoin up and gold down? Yeah, I mean, the cryptocurrency markets are really, really rocking here. Now, every time we talk about, you know, cryptocurrencies, I get a lot of emails about, you know, I'll tell you an email I got yesterday. It was this gentleman, very good, nice guy. Well, I guess maybe not so nice. You know, watches the stream and he's like, Tom, you come off as such a, what did he say? An educated young man. But then I heard that you owned Bitcoin. And he was kind of like very taken aback, to use his term, like how I could fall for that or something. Look, we all have our different opinions on things. Some people are invested in Bitcoin and they like it, and some people aren't. And I think that's fine. But even if, right, and I always give this example as we're standing here outside the Trump Tower, even if, okay, you are not interested in Bitcoin, and maybe you even think it's a fraud, maybe you think the whole cryptocurrency ecosphere and ecosystem is totally fraudulent, you should still pay attention to it. In my view. Mainly because it acts as a sort of risk proxy on the street. If you have those crypto assets really getting bid up, right, and price action is doing really well, well, that means there's a very robust risk appetite on the street. I just want to take you to the other side of Trump Tower. This is 721 Fifth Avenue. This is where you would go if you own a condo or you rent in the building, you would go right here. So that's kind of what I would say. Even though if you're not a fan of it, you should still kind of track this stuff, right, and be aware of it. Doesn't mean you have to buy it, but it'll give you a good sense of where breadth is on the street. And 9 times out of 10, when you have things like, you know, cryptocurrency, Bitcoin, Ethereum acting really well, right, and going up, that's bull market behavior, okay? When you are in a very, very severe bear market, you don't have in my opinion, some of the most risky, risk-on assets going up. So I think from that perspective, it's important to kind of focus on it as well. Andrew, good to see you. Thanks so much for your 5 CAD donation. I appreciate it very much. Thank you for watching the stream. Yeah, JC says do not confuse crypto for Bitcoin. Indeed. Swearworks, just pull up BTC versus USD, or BTC versus stock market performance for the last 15 years. What else we got here? Hey, Mel J, what's up? Good to see you. Thanks so much. But yeah, I think it's still important, right? Just to kind of use it as a risk proxy. I did the same thing. I track a lot of the special purpose acquisition companies. Now, a lot of those SPACs, you would never see me getting involved, you know, never say never, but you would never see me getting involved in, you know, a SPAC ever, pretty much. And at the height of the bull market in 2021, you had a record number of IPOs and SPACs coming public on the market, right? That doesn't mean I need to participate in that, but I can use it as a gauge of euphoria. And chances are, but if you look back throughout history, when you have liquidity flowing freely through the market, right? And when you have all these like junk deals getting done, and they're obviously junk deals, that can be a signal of euphoria. We've talked about this once before. I'll quickly show the Peninsula Hotel, but it's almost more important to pay attention to companies that are coming public during bear markets as opposed to companies that are going public during bull markets. Because if you can have investors part ways with their cash when markets are going down and things aren't going so well, well, then it's probably a really, really good deal, right? Not all the time, but generally speaking. So kind of use that to your advantage in a way. If you see a company going public during bear markets, it's a good possibility that the deal's pretty good. All right, let's get off Fifth Avenue here. I feel like it's very noisy on Fifth tonight. I think because it might be garbage day. Hey, Alan. That's a really good point. I like Alan's comment. Alan says, I've always told people if they don't like crypto, that's fine, but I don't need to hear their pitch why. Yeah, invest where you see value and I'll do the same. For sure. Yeah, 100%. Usually a lot of the guys and gals that are trying to pitch you a crypto investment, it's usually these, well, what I like to call kind of like these Ponzi-like schemes that have really been going bust all over the place. And that's why I kind of stay away from a lot of the altcoins, because increasingly the SEC, Gary Gensler, Securities and Exchange Commission, has really been coming after a lot of the people who have been promoting these alternative crypto coins, if you will, right? Particularly a lot of the celebrities during the bull market that were getting paid so much money to promote this nonsense. The SEC is actually coming down quite hard on them, so. Yeah, Gary says, beware of irrational exuberance, Alan Greenspan. David, what's going on? Says, hello, just joined. Have you touched on why you think Jamie Dimon dumped a lot of bank stock? Well, I don't know. I put a little bit more weighting, and I think we briefly discussed this last night, but a really successful manager on Wall Street told me something, and she said the following. She said, there's a million reasons why executives, CEOs, you know, board members, whatever, whatnot, at major companies sell stock. This building is beautiful, by the way. Look at all the moldings. Look at the stairs. It's stunning. So anyway, there's a million reasons why people sell. You know, to manage their liquidity. You know, maybe they're buying, maybe they want to free up cash for another investment. Maybe they're buying a house. A million reasons, right? But there's really only one reason why an insider would be buying their company's stock. And that's because they think it's going to go higher. So in that event, I actually put a little bit more weighting. It doesn't mean I'm ignoring it, but I put a little bit more weighting on when executives, CEOs, and the like purchase stock as opposed to sell. Jamie Dimon almost never, ever sells any of his stock. I don't know. I'm not Jamie Dimon. I know he's been spending a lot of time in Miami, though. And I think we need to keep our eyes peeled as to why. He's been spending a lot of time in Miami. He's actually there now at a high-yield investing conference, which we'll talk about that interview as well. It was a really good interview with Jamie Dimon today. Kind of talking about the same things we've been echoing on the stream. That optimism, right, particularly in the private equity markets, in the IPO markets are starting to, things are starting to not be so gridlock on Wall Street anymore. So yeah, I think we should pay attention in a way to insiders selling. But and this is just my opinion, doesn't mean I'm right, doesn't mean I'm wrong. I've always put a little bit more weighting on when people purchase stock as opposed to sell it. Now, Amazon, right, kind of a little bit of a segue, but not really, we'll kind of stay on topic. Amazon, ticker symbol AMZN, today, Monday, February 26th, replaced Walgreens in the Dow Jones Industrial Average. So now Amazon is officially a part of the Dow 30. Now the reason why I bring that up is because Jeff Bezos, obviously Jeff Bezos isn't the CEO of Amazon anymore, right? But he's been selling billions of dollars worth of Amazon stock. But it's not a large portion in relation to his total equity stake. And when I explain that, that's kind of crazy because, the guy's selling multiple billions of dollars worth of stock, and to even comprehend that that doesn't really even scratch the surface of the guy's net worth. It's crazy. That's how much wealth these people have. In any event, he's freeing up a lot of that liquidity, as he said, to pour a lot of money into his Blue Origin business, which essentially rivals, Elon Musk's, I was just about to say Space Force. No, not Elon Musk's Space Force. SpaceX, right? So I think it's a mad race to get to Mars in the billionaire land. So, who knows? All right, let's see how Brad says Diamond has sold no stock for like 10 years. Until this past year, he only sold, I think, $150 million. Oh, no way. Ryan Beck says, I forgot to mention, I met Tom Lee at a fundraising event in Austin a few weeks ago. Oh, that's awesome. I love Tom Lee. Great guy. Now, I think one of the main reasons why I really appreciate Tom Lee from Fundstrat is because he takes a lot of heat, right? And to be I would consider Tom Lee almost like a public figure at this point, because he's always on CNBC, he's always on Bloomberg, and he makes his calls so public, right? And it's very tough to do that because you get extreme scrutiny from the public. If you make one bad call, that essentially wipes away all of your good calls, and everybody, trolls you and memes you on the internet. But Tom Lee has nailed this market to a wall this year, okay? He has absolutely been 100% correct. And a lot of the naysayers and the bears on Wall Street have been dead wrong, right? Regardless of any of the macro nonsense you want to bring up, they'll just say, oh, but the crash is coming, the crash is coming. Okay, well let's say if you're right, let's say if the crash is coming, you missed out on 200% moves in some of these stocks, okay? The S&P is at all-time record highs, the NASDAQ, the Dow, Bitcoin is now above 56,000. So the bears have missed the move, but they're so quick to, run down this guy's throat if he gets one thing wrong. So that's why I've always really respected Tom Lee. It's not easy to, constantly be on CNBC, make great calls, but the moment you get one thing wrong, it's like, full on attack. So I like Tom Lee very much. Yeah, Brad's brains is like he's also very positive right now, which is easy to like, for sure. Adam A says, if he spends enough time in Miami, does that mean he can avoid New York City income tax? I don't really know how that works. I think you need to spend at least, 6 months? Something like that? 6 months or something? I can't wait to be down in Miami, though. I will be there next week. But quickly shifting gears here, everybody. I also want to talk about hospitality for a moment, okay? As we kind of talk about, how the economy is doing. We're standing right outside of the Hilton flagship hotel here in New York City. Now we're going to talk about two companies in particular, one Hilton, and number two, we're going to talk about Hyatt. So the ticker symbol for Hilton is HLT, and Hilton just went on to hit a new all-time record high yesterday and then today. So with all of this talk and all of the negativity in the media about how, the consumer is doing very poorly, the economy's not doing well, then why are a lot of these hotel stocks breaking out in new all-time record highs? So, interesting. Number two is Hyatt, right? And Hyatt is at the very, very high end of hotels, right? If you think about Park Hyatt and the like, the ticker symbol there is H, ticker symbol H for Hyatt. That stock, after earnings last week, it broke out and ran in new all-time record highs, trading at $151. So it's important that we watch each individual sector in the market to kind of gauge some market confirmation, if you will. We kind of want to see many, many different individualized sectors in the market participating, and that's exactly what we're seeing, right? In the last newsletter, we wrote about biotech. Biotech is starting to try to break out and get involved again. You see home builders doing really good, even still. I mean, talk about a narrative buster there. You just pull up any of these home builder stocks, like Toll Brothers, Taylor Morrison Home, and not only have earnings been good, but the price action in these stocks and also the forward guidance has actually been surprisingly good too. However, one thing I wanted to say about the home builders real quick, and I'm sure all of you could appreciate this, particularly those of us who work in the real estate business or who may own property. The interesting thing is as follows. I thought that was a rat. It wasn't, it was like a paper bag. But the interesting thing is as follows. There's not a lot of inventory on the market in terms of the resale business, not only in New York City, but really all over the country. There's not a lot of good resale inventory on the market. So where is a lot of that inventory going to come? It's going to come from the new home builders. It's going to come from new product. And new product, or these builders, right, Toll Brothers, D.R. Horton, and the like, they also have a little bit more wiggle room to get deals done for the following reason, right? If you're buying new product, chances are you could negotiate with the developer to buy down the points on your mortgage, maybe negotiate a little bit better to take some money off the top of the price, maybe even pay, some money into the deal for taxes and the like, where you can't really do that with resales. So product has been moving in the single family home market. All right, if you guys are enjoying the stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these streams almost every single day, starting at 8:30 p.m. Solid Pixel says, do you think REITs are good to get into at this time? So I don't advise on any, if it's good to get into this or that. We just really have an open discussion about the market. Very, very seldom, if ever, I'll say, hey, this is good to get into, or that's good to get into. We just have an open discussion. So I guess I'll say, what do you think? Do you think it's good to get into REITs right now? This is the Steinway Tower at 111 West 57th Street, the skinniest residential apartment building in the world. Hey, Junior. I will make my way to Brazil soon. Let's see what else we got. Carl Roth says, Tom, look at the demographics. 30% don't have debt. They are going out and spending. 30% have debt. 30% are kids. 10% are rich. Who Dat Dave says, Tom, the market may be at an all-time high, but in reality, we are only back to where we were 2 years ago. That's true. That's true. You know, and that's as you know, this is a new bull market in my opinion, in my view, and there's still a lot of bears that think this is a bear market rally. You don't have a bear market rally after one of the most severe bear markets in both price and duration, okay? Because you can have a correction in two forms. There's really two types of corrections on the street. You can have a price correction, right, in terms of the drawdown, the overall percentage of the drawdown, and you could also have duration, which means does the bear market last 3 days or does it last 3 years? If you look at the S&P 500, the market has been going down the sideways for almost 2 years. And if you think about beta, right, and we talk about this all the time, we talk about beta weighting a portfolio and things like that. At its peak, or I should say at its trough, I believe the S&P 500 was down over 30%. So if the S&P is down over 30%, what does that mean for the individual stocks in the index? Well, some of them were down 50 to 90%, particularly a lot of these SaaS companies, software as a service, and these tech stocks. So the bear market that we're emerging from has been a very, very severe bear market for a lot of these individual stocks. I mean, as bad as it was since the great financial crisis. The only reason why many people on Main Street are not really aware of that is because they only really look at the index, right? They only look at the benchmark. They'll look at the S&P, they'll look at the Dow. And if they see an overall drawdown of 20%, they're like, ooh, man, the market's down 20%. You know, it's not super bad. It's not like it's down 50%. But if you ever look at the individual stocks, right, just take your pick. You know, some of them were down 90% and they're still down 90%. So I wanted to take you by the Park Hyatt, New York, right here. This is inside 157 West 57th Street. This is the first building ever constructed on New York City's Billionaires Row. And I believe the room rates start at around $1,000 per night. So Hyatt, ticker symbol H, just hit a new all-time record high again. So hospitality, right, a lot of these hospitality stocks, hotel stocks, are performing well. And they're telling us that the demand for travel, the demand for lodging across the United States, and really even the world, is pretty high, is still pretty high. Now, does anybody here, if you're in the chat, does anybody currently work, or does anybody know anybody, immediate family members or friends, who actively work in hospitality right now? And that can include maybe you work at a hotel, you know, maybe you work in sales or operations or whatnot. Are you kind of seeing the same thing that corroborates this price action? Are you starting to see, you know, occupancy rates at your hotel go up? Kind of what are you guys seeing? That's kind of what I care about most. Interested. Raymond G says, Tom, hospitality is doing much better with the recent curbs on Airbnbs. Gidat says post-pandemic bounce in multiple sectors. Palmer says if hospitality is doing well, so are credit card companies. You're actually right. Credit card companies are doing great. And a lot of the credit card issuers that we've covered, particularly at the very beginning of earnings season, right? I'm sure you've all remembered a few months ago when earnings season kicked off. At the start of earnings season, you always have the major banks, the financials reporting earnings. And the number one thing I always look at is credit card debt, but also delinquencies. And the only really concerning thing that I'm starting to see, and if you want to look at this, we actually pulled all this data from the earnings decks of JP Morgan, Bank of America, Discover, Capital One. We actually pulled all that data. You can see it in our newsletter. You're starting to see delinquencies of 30, 60, and 90 day start to just get back to the pre-pandemic trend. Now, it's a concerning trend, but it's also it's still manageable, because in Q4 of 2019, right before the pandemic, the delinquency rates weren't super horrible, but when the pandemic hit and the government was giving everybody money, most people actually took that opportunity to pay down debt significantly, which is good. So what this trend towards pre-pandemic levels of, delinquency, what this tells me is that the general consumer, right, is just starting to kind of eat through the majority of their, I would say, pandemic pent-up savings. And maybe they're starting to, kind of really need to hunker down and try to pay off some of this debt. And maybe that could impact consumer spending down the line. I don't know. But generally speaking, consumer spending has been pretty good. All right, everybody, this is the Nordstrom. Massive Nordstrom here, but it is actually in Central Park Tower. So the tower we're looking at right here is the tallest tower on New York City's Billionaires Row. It spans just over 1,500 feet tall, and the developer is Extell, so EXTLL, 217 West 57th Street, right here. So since these summer months are coming up, I guess I'll ask the audience the following question. Is anybody here in the audience planning an interesting summer vacation? Anybody? And the reason why I ask that is because, generally speaking, if you are planning a summer vacation, I would assume you're going to stay in some sort of a hotel or Airbnb. We're looking up towards Columbus Circle now at the Trump Tower. Justin says, Tom, how many billionaires are there in New York City? Well, there was a recent CNBC article that said New York City has the most billionaires in the entire world. I think the number 2 city behind New York is Hong Kong. Oh, cool. Patrick says, yes, I'm going to Tennessee. Boomer Bob says, I'm going to Ireland next month. Paul says, I'm going to Vegas. Arun Z says, Tom, I'm going to Istanbul, Turkey. Whoa. Alan says, I'm going to DC this summer. Kimberly says, we are going up to South Dakota. Wow, that's awesome. Gary says, full vacationing in Alaska. Well, see, I mean, we can use this as a little bit of anecdotal data here. It looks like a lot of people are going away. Vinny says, 15-day cruise from Bergen, Norway to London in July. What cruise line are you going to, or are you going on? I think there was a cruise line that just reported earnings a few days ago. See, this is, and this is obviously extremely anecdotal, but it's also quite important because I believe in the cockroach theory, right? And the cockroach theory states if one person is doing it, and I usually use the cockroach theory for earnings season. So I'll give you an example. Okay, let's say if Microsoft reports a blowout quarter and they say, hey, our Microsoft Azure cloud platform beat expectations and now we're going to guide higher for the next quarter. Well, cockroach theory states Google Cloud is probably going to kill it as well. And Amazon AWS is probably also going to kill it. That's why oftentimes if a big cybersecurity stock, this is just another example, if a big cybersecurity stock reports earnings and they bomb, the whole sector is down, right? You'll see other companies that deal in the same industry also be down on that news. So if almost everybody in the chat is saying, yeah, I'm going to Norway on a cruise, I'm going to go to South Dakota, I'm going to go to Istanbul, Turkey, and then we look at the hospitality industry and we look at the cruise sector and everything is up, well, I think we found our answer why, right? Again, a little bit anecdotal, but Andrew, thank you so much for your $5 donation. This is any idea or info of this week's FOMC meetings and possibility of the market effect. The FOMC is this week? I don't know if it's this week. Or you mean at the next FOMC meeting? Well, I think it's really going to depend on the inflation data that we get out on Thursday, right? I think it just depends on the inflation data that we're going to get this Thursday, which is the Fed's preferred inflation gauge. I think if that comes in hot, we'll probably have higher rates for longer, which I think it may come in hot, by the way. I don't know. Oh, good odds says go to India after the monsoon ends in September. I'd love to go to India. Very, very bullish on India. Wow, Nick says I'm going to Italy for a month. Damn, you guys have some deep pockets in the chat. Very cool. What part of Italy? I'd like to travel to Italy. I almost never travel. All right, let's make this lap around Columbus Circle by Deutsche Bank Tower. Anna says would like to try Verbo. I believe Verbo is kind of like an Airbnb. The only difference is you have to rent out your residence in your full residence. You can't rent out by the room. Padilla says I will be in New York City in 3 weeks. Awesome. Happy to have you here. Gord says your walkabout shows a civilized city that defies the narrative that New York City is crumbling. Well, yeah, because the media is sensationalism. I always like to say, if you're watching the news in 2024, you're not watching news, you're watching sensationalism, right? So does New York City have problems? Of course. We're going through a really, really difficult time right now. But it's not like Armageddon that everybody's talking about. The incidents that you see in the media are real, right? But they are isolated incidents. That's not to excuse those incidents, but that's the media's job, is to sensationalize and get people all cranked up. That's literally their job. That's why I do not respect the mainstream media. Hey, FredX, what's going on? Tariq Khan, what's up, Tariq? Robert Parker says I'm going to Philippines. Cool, cool. Let me just catch up on some of the comments. Trax says Airbnbs are a waste of money with all the fees. Might as well get a hotel. Let's talk about that for a little bit, because I'm actually interested in people's perspective on that. I've been seeing that narrative thrown out a lot, and I'm curious for the following reasons. So I guess you can consider I have an Airbnb business. Not really, I just rent out my house. I don't think that's considered a business, but I would say I'm an Airbnb landlord, I guess. And I don't know what all these fees people are talking about. Maybe some landlords add ridiculous fees, But I rent my place out on a monthly basis, and I only charge one $50 cleaning fee. That's it, 50 bucks. I don't know. I mean, I don't see, maybe are you talking about different fees that have to be charged? Like in the state of Florida, they have to charge some hotel tax. I know in New York City, they have to do that. I don't know. But I think my place is a pretty good deal. You know, you could get a 3-bedroom, 2-bathroom, 1,500 square foot house in Miami, 2 miles away from the ocean, one of the best beaches in Miami, Sunny Isles Beach, for like 3,500 bucks, right? During off season. In peak season, it's 4,000 bucks. That's pretty good for 30 days. I don't know if you can get that at a hotel. I don't know. So what, what fees are you guys talking about? Because it's important for me to know this as a host, because I can kind of exploit that to maybe get more business, get more customers. Speaking of hotels, this is the Mandarin Oriental. This is a 5-star luxurious hotel that sits at 80 Columbus Circle. John says, Tom, where do you stay? If you rent out in Miami, I stay at my house. Tariq Khan says, Airbnb, the company, is a farce. Deep dive the amount of money they pay to keep their name out of mainstream media. Well, at this point, there's a lot of people that say, oh, well, the hotel lobbies are very big and strong, which they are. But I mean, look at the market cap now of Airbnb. They have their own money to lobby too, right? I was thinking about that the other day, because I was also on the side that, the hotel lobby in New York City is obviously lobbying very, very hard to keep Airbnb out, and they've done a pretty good job. But if you think about it, like, Airbnb is pretty big too. So I think they could spend their own money, trying to lobby and beat back the hotel lobby too. I don't know. We'll see. CNS says, I think fees are directly related to the state, city, and local. Here in Tennessee, the taxes are low. I think you're right, because I do see, like, the amount that I get deposited in my bank account is obviously not the amount that the customer pays. I see some like hotel taxes, but you're going to pay the same thing if you stay at a hotel, if you stay at an Airbnb, in terms of those added fees, right? I think if you're a host and you're charging like a $300 cleaning fee, I think you're just being a little bit egregious. And, hopefully over time, those people who are charging $300 cleaning fees, maybe I'll win a lot of that business. You never know. Peter says the Mandarin is owned, for a Hong Kong company. Okay. Cool. Brian M says, I've seen a bunch of people post screenshots of receipts of cleaning fees, $100 plus just for a couple nights. Yeah, well, I mean, if you agree to that, I mean, because you see all of the fees before you book. If you book an Airbnb, you see all of the fees that you're going to pay before you book it. So if you agree to a $200 cleaning fee, I think you kind of deserve it. I totally disagree with the host who's charging a $200 cleaning fee. But, hopefully they'll lose business and I'll get more business. Who knows? All right, here we are, everybody, Columbus Circle Station. This is the AC, BD, and 1 trains. You can go both up and downtown. It's a beautiful night, finally, in New York City. It's actually kind of warm, thank God. CNS says, I would much rather stay at an Airbnb for $150 per night than a hotel. Now, what I've also found is the duration of the stay, the longer it is, the better, I think, in my view. Particularly for the landlord, it's a little bit better. Hey, Forensic Engineering and Failure, thank you so much for your very, very generous donations is just supporting a fellow content creator. Cheers. Hey, Forensic Engineering, thank you so much. I appreciate you and your support. And welcome to Walks on Wall Street. We're happy to have you here. Now, speaking of engineering, maybe you could help our NYPD cruiser here. Look what happened. This is the Ford Mustang Mach-E, I believe. It looks like it got in a little bit of a fender bender. That's unfortunate because I think these Ford Mustang cars look sick. I love these. These are the new EVs. What are your thoughts, everybody in the chat? You a big fan of the Mach-E's here? Let's see what the grille looks like from the front. I think they look so much better than the, the Ford, police cruisers here. What do you think? I like the design. DC322 says I hate it, really? Well, I guess everybody has their own style, if you will. I'd like to see more Teslas and more Fords. Greg says EV market is a joke. KM Ramsey says I will keep that in mind next time I go to Miami. Chris B says garbage. Wow, not a lot of EV fans. I get it. All right, this is the Trump International Hotel and Tower here. This is 1 Central Park West. And something that you guys won't appreciate is right here. What you're looking at right here is the really, really horrible congestion pricing. So the city is going to charge you every time you travel southbound, south of 60th Street. They're going to charge you a toll and a fare. I'm not too sure how much it's going to be. I think it's like 10 bucks. But still, 10 bucks adds up, guys. Imagine if you come into the city every day, you're driving every day, and they're going to bang you with a $10 toll just to drive south of 60th Street. That's going to add up quite a bit. That's $70 a week. I was watching an interview with Elon Musk, and apparently for every EV that Ford sells, they lose about 20 grand. So the EV business for a lot of these auto OEMs, excluding Tesla, is a huge money loser. So Ford loses a ton of money when they sell EVs. Vinny says Ford EV Lightning trucks are a mess. They stopped production. Joe says those charges started already. I actually don't know, in full transparency, mainly because I don't drive. Does anybody know the exact start date for the congestion pricing in New York City? This is an amazing shot of Billionaires Row. Look at this. Now, if you guys didn't see it, I filmed a standalone full narration walking tour of New York City's Billionaires Row, highlighting every single building, explaining how tall it is, how many units are in each building, the average price per square foot in each individual building, and the height in each building too. Now, the one with the gold top is 220 Central Park South. It's about 950 feet tall, and the building behind it is Central Park Tower, Gary Burnett's building, so Xtel, and it spans just over 1,550 feet. Now, 157 West 57th Street was the first building ever constructed on New York City's Billionaires Row, and it stands just over 1,005 feet tall. It's also Xtel Development Company. And then, of course, you have Steinway Tower. But let's start to head down towards 34th Street, because that's where I have to go anyway. We'll take one more look at the damaged Ford Mustang. This is the main entrance to the 59th Street Columbus Circle train terminal, where you can get the subway. Yeah, it looks like they got into a little fender bender and a flat tire too. Tariq Khan says nobody talks about the amount of child slaves in Africa used to mine elements for EV batteries. Yeah, well, there's actually a really good book that just was written about that. I believe I recommended that, by the way. I forget who the author was, but there's actually a really good book on it. I'm just trying to remember. It'll come to me in a second. But yeah, it's a lot of the, and that's why a lot of these EV, auto OEMs are trying to find alternatives to cobalt, because the lion's share of the world's cobalt deposits are in the Congo, the Democratic Republic of the Congo, and there's a lot of, like, quite literally slave labor in those, I call them like camps, essentially, to mine these, the cobalt mines. It's a real thing, and it's very important to talk about, by the way, because and not to rustle any feathers, this was my biggest gripe with the whole ESG, environmental and social governance scam. Because a lot of the ESG people, particularly politicians that are pushing so hard for ESG, number one, ESG is pretty much over, and I'm kind of glad for that, because it turned out to be, it started off as very, very good, and then it was corrupted politically. But you can't just say, oh, look at me sitting on my high horse, I own an EV, and then you don't spend the time to look into the supply chain, right? So it's not so green and it's not so socially good when you have, the raw earth, or I should say the rare earths and the raw materials being mined in unethical ways, so to speak, right? We want to make sure we're sourcing that ethically. And Elon Musk has been very outspoken on that too. And he's saying he gets most of his lithium from Australia. So it's a good point. I just forget what the book is called. But look, I'm a big supporter of EVs. I'm a huge advocate for, making the earth a greener place, a cleaner place. I'm very, very passionate about that. But the way we do it is not by the political virtue signaling, it's by actually doing what makes sense, right? By doubling down on nuclear power, sustainable, clean energy, not kind of the nonsense we're doing now. This is 220 Central Park South. We're right here, 59th Street, Central Park South, beautiful entrance. It's quite peaceful here. Oh, cool, Michael. Nice update on the Flatiron building. Cool. We'll have to go down there and check it out again. They're going to do a condo conversion. This building on our right is really, really unique. It is a co-op, however, but I think it's so unique because the balconies almost wrap around the entire property. Let me stand on the corner of 7th Avenue so you can see a little bit better what I'm talking about. but this is 200 Central Park South. If you want to see what some of the units look like on the inside, if you go to streeteasy.com and just search 200 Central Park South, it's a really, really cool building. Now, it is a co-op, okay, so it's not a condo, so just to warn everybody. But look at those balconies. Isn't that cool? I mean, come on, that's awesome. You have these wraparound balconies. Could you imagine sitting on your balcony? You have a front row view of not only Central Park, but this is exactly where the Macy's Thanksgiving Day Parade comes down. Like, I would buy that co-op just for that, right? So the Macy's Thanksgiving Day Parade comes down Central Park West, then it bangs a left on Central Park South and comes all the way down by 6th Avenue. So you could sit out on your balcony, you know, as you're cooking your Thanksgiving turkey and have a front row view of the parade. It's just such a unique building. It's so cool. I love how they did that, these big wraparound balconies. It's awesome. Again, check out some of the listings that are here. 200 Central Park South. I think you'll enjoy them. All right, let's head down. We'll go to 34th Street. This is the New York Athletic Club. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these lives almost every day starting at 8:30. You can see the New York Athletic Club Paris 2024. Cool. Now, this is one of the best pieces of New York City architecture, in my view. We're standing on the corner of West 58th Street and 7th Avenue. And we are quite literally at the foot of Alwyn Court. Look at that. Just an amazing architectural marvel here. Isn't that stunning? I love it because you have this amazing clash between the old architecture in New York City and the new architecture, such as 157. Now, Alwyn Court is a residential apartment building. The address is 180 West 58th Street. Let's get a little bit of a closer look just so you can see all the details on the building. It's almost a little unreal, the details on this building. Look at this. Isn't that pretty incredible? Now, during the day, you have to see this building. It looks way better during the day. What do you guys think? Once again, this is Alwyn Court, 180 West 58th Street. Would love to live in this building. It was built in 1907 and 1909. cool, right? Yeah, Meg says love it. It's an awesome building. Now, if you come here during the day, you got to stand on the other side of the street by 200 Central Park South. And on a very sunny day, like the sunniest day in Manhattan you could get, you got to take a picture over there, because you have 157, which is the Extel building, the first building ever constructed on New York City's Billionaires Row. Has like this amazing contrast to Alwyn Court. It's quite stunning. And then you're right here at Carnegie Hall, one of the most famous places in the city. This is a cool shot. You're looking at 432 Park Avenue and the full moon over there. Looks like there's a show just getting out too. Okay, we got the light, so we are now crossing southbound at Carnegie Hall. And it looks like something's just getting out here too. Let's try to see who is playing. Sometimes they'll post who's playing here. Cool. Pretty soon you'll have all this scaffolding down. Wow, tickets are only $103. I told this story a million times, but I was working on a weekend at my office all the way down at 1166 Avenue of the Americas, and there was a big power outage. There was a big blackout in Manhattan. And I was just about to step on the elevator when the power went out. So I walked downstairs and everything's totally blacked out. So I walk all the way up from 45th Street right to this corner, 57th Street and 7th. And there was a big event going on at Carnegie Hall, and they actually took it outside, and the musicians were playing their instruments in the middle of the street, in the middle of 57th Street. It was crazy. That was probably one of the craziest New York experiences I've had. Blackouts are fun, you know, aside from the looting and things like that. But if a blackout is only, 3 to 4 hours, there's really none of that crazy crime. It's just a lot of people outside having a good time. Anyway. So a little piece of New York history for you. Across the street, right on the corner of West 55th, this building right here, this used to be the Carnegie Deli. Who's old enough to remember that? Anybody old enough to remember going to eat at the Carnegie Deli? It was an amazing New York icon. Now they shut down because they couldn't afford the rent. It's unfortunate, right? We have so many, great bodegas that are going out of business because they can't afford the rent. But what's so, disheartening is that the landlord and the tenant, which just so happened to be Carnegie Deli, they couldn't figure it out. They couldn't come to an agreement. And it's not like something else ever moved in there. It's just vacant, which kind of stinks. So the Carnegie Deli moved out and nothing moved in. Hey, hang with Mark Maham, what's up? Thanks for joining us. We were just talking about, at the beginning of the stream, some encouraging rotational action on Wall Street, right? You're starting to see some of these big mega cap companies like Apple and the like that have had really, really good runs. You're starting to see them pull back a little bit, and you're starting to see that sector rotation in some of the smaller names like the Russell 2000, right? The IWM had a good day. Also, microcaps had a good day as well. But as we talk about, deal making on Wall Street, particularly IPOs, private equity, M&A activity, things like that, what's telling me that that's going to pick up in a big way is the price action in some of the largest publicly traded private equity big firms. You can think about KKR and Apollo. Those companies are trading at all-time record highs. Just type in ticker symbol KKR. New all-time record high, and ticker symbol APO, which is Apollo Global Management. Wow, I remember going in right here as a kid, and you would go in this store right here. This used to be the Carnegie Deli. Now it's just all blacked out and abandoned. How sad is that? You can see a little bit of the sign of the Carnegie Deli that it used to look like. But now it's just, wow. It's actually kind of sad looking at it. And this place used to be so cool. Now, this development site is supposed to be something big as well. It's not every day you see just a vacant lot in Manhattan. I wonder what this is going to be. This is like a prime piece of land in Manhattan that is totally empty. Probably trying to keep the rats out. I can only imagine what the land value is right there. What do you guys think, if you had to guess, what the land value is for this vacant parcel of land right here? I'd say probably a crazy amount. There's probably going to be some ultra luxury, super tall tower that goes in its place. It's only a matter of time. Mario says they have Carnegie Deli at Knicks games. Didn't know that. Hey, Felix says cheer up, Tom, and head over to the Flame. You know what? I actually may go to the Flame Diner tonight. If you're in the neighborhood and you want to go to the Flame Diner, it's on me. Okay, this is going to take us directly into the belly of the beast here, Times Square. You're going to pass the old Lehman Brothers, which is now Barclays. And we're also going to pass Sheraton, the Sheraton, New York hotel. right next to the Barclays, you have BNP Paribas, which is the French investment bank. Hang with Mark Baum. The stocks are moving up, loving it. Now, what are your thoughts about more of the boutique style? Now, I don't own any of these names, but again, I like to look at them to kind of gauge not only risk appetite, but gauge if the IPO market's going to move up or going to start to open up, if private equity is going to start to open up. So I like to look at a lot of the more boutique investment banks like Piper Sandler, Houlihan Lokey, and Evercore. So just take a look at those three companies, right? They're all publicly traded. Evercore, ticker symbol EVR. I believe Piper Sandler's ticker symbol PIPR, I believe, Piper Sandler. They're all trading at 52-week highs and in the new all-time record highs. So what that tells me is that the market signals that deal making is going to pick up in a major way. Because the way these, boutique style and just investment banks in general, the way they get paid, right, is from the fee income. Equity underwriting fees, advisory services if they're doing an M&A transaction. So the more fee income they make, generally speaking, the higher the earnings and the like. And you can do it like you can work back historically here. Goldman Sachs had one of its greatest quarters on record in 2021. I think this was Q3 going into Q4. And what do we know about 2021? Well, that was the best year on record for new issues, new IPOs, right? 2022 and 2023 is the exact opposite. The IPO market's pretty much shut off entirely. There was almost no new issues coming public. The private equity markets were totally in a gridlock. But things are just starting to open up. And that's good. That's actually very, very, very good news. And Jamie Dimon, the CEO of JP Morgan Chase, said the same exact thing. Jamie Dimon was in Miami today at the JP Morgan conference for high yield. And you got to watch that CNBC interview, because the interviewer, right, the journalist, sort of asked Jamie Dimon that same exact question. What do you think about the public markets? What do you think about the private markets? And he's like, look, deal activity's picking up. We think there's gonna be a lot more transactions this year. And generally that's good. All right, this is West 50th Street and 7th Avenue. Look at that. This is Barclays. I think we may make a right. No, make a left. Because there's usually a lot of buffering going up here. (745) 7th Avenue. The old Lehman Brothers. But if you all kind of like these financial talks that we have each and every night on the stream, all of these different conversations, feel free to scan the QR code on your screen, because this Thursday we are going to be sending out our 4th issue of our Behind the Street newsletter, which is our free financial newsletter that we send out every other Thursday, where we cover the US equity markets, emerging markets, fixed income, and New York City real estate. So if you want a behind the scenes look on some of the most exclusive real estate listings, both on the residential side and the commercial side, feel free to scan the QR code, punch in your email, and join us on Thursday when we send out our newsletter. You'll also have access to about 2 years worth of archived research as well. Hey, NAV407, what's up? Let's actually make a little bit of a detour to avoid that guy. Hang with Mark Baum. This is Tom. I agree. I always follow the money, which is a good indication on where the economy will be headed. Business is definitely picking up. Now, another thing we were speaking about, hang with Mark Baum, is the hospitality business, right? And we were kind of taking a little bit of a poll in the chat, kind of saying, you know, what are you seeing in the market? Because if you look at stocks like Hilton, ticker symbol HLT, also Hyatt, ticker symbol H, these stocks are breaking out into new all-time record highs. So for all of the negative sentiment and all of the bears out there that say the economy is so horrible, everybody's doing so poorly, well then why are hospitality and hotel stocks breaking out into new all-time record highs after earnings, right? So these are things that are so important, and that's why I always say it's good to think objectively, right? Because the media, both on the right and the left, they're there to propagandize, right? They are there by definition to mislead you, okay? Fox News, CNN, Business Insider, you know, these are not stand-up institutions. These are, you know, propaganda, fake news businesses that are intentionally out there to mislead you and misinform you because they want to drive clicks. So it's always going to be extreme negative headlines. It's always going to be very, very divisive news to try to divide the American people and conquer, so to speak. So it's important to turn off the news and follow the price action, right? Follow the earnings, follow the reality. I always say reality is in the earnings. Oh, they're shooting a music video. Look at that. That's cool. But anyway, earnings don't lie. All right, we've made it to Times Square. Wow, hang with Mark Mom. Says Tom, I wanted a few weeks living inside the Grand Canyon, and I booked too late. All full, and I was planning on paying $450 a night. Nothing was left to book at all. Wow. So people can't even get hotel rooms right now. It's insane. I think I was telling you, you know, one of my really, really good friends works at the Park Hyatt, New York. And all, I would say, the fall and through the holidays, they had over 90% occupancy. And if you think about the Park Hyatt, you know, the room rates start at $1,000 a night, which is insane. So $1,000 a night, and you almost have total occupancy. I mean, that's insane. This is West 46th Street. gonna head out of here though. Now coming up over here is the NASDAQ. And this is also where they shoot CNBC. So if you ever watch like Andrew Ross Sorkin in the morning, Squawk on the Street, they film it right over here. I believe on 43rd Street, right outside One Times Square. G'dat. So you'd much rather watch Bloomberg or Cheddar. Yeah, whatever happened to Cheddar TV? I remember that. I think Yahoo. Doesn't Yahoo own Cheddar TV? I forget. I think they might. I think Yahoo may own, or it's like a subsidiary. Let's go this way. What is today? Monday night? Times Square is actually pretty busy for a Monday night. Maybe just because the weather's nice for once. Hang with Mark Maham says, see Tom, I follow the money. I haven't gone on vacation in 5 years and now I'm ready to go. Yeah, let us know how it is. Hey, Brad's Brains says, Tom, I watched Billionaires Row earlier. Great job on that one. Appreciate it. Yeah, I thought you guys would enjoy that. You know, a lot of people get to see Billionaires Row on the live stream, but they don't really get to see it, you know, in a more detailed, high quality way. Now coming up, I'm going to be taking you guys inside each and every building on Billionaires Row. And we are going to start with 157. So we'll take you inside 157 West 57th Street. Then we're going to go to Park Avenue and look at 432 Park on the inside. Then we'll do Steinway Tower, 220 Central Park South, and then the grand finale will be Central Park Tower. I think you guys are going to enjoy it. So stay tuned over the next 3-month duration. We're going to kind of spread those videos out. Now this is the NASDAQ and the CNBC studios. You can see Squawk Box. Pretty cool, right? I just saw an advertisement for Monday.com. Anybody use Monday.com? It's a competitor, I would say, of Workday. Ticker symbol WDAY. I think Workday reported earnings today. I just didn't have enough time to look into it. But Monday is also publicly traded under the ticker symbol MDY. They're kind of both like HRS software, I believe, enterprise software. I believe we use Monday at work, but I never really log into it. It's more of like an onboarding platform for new employees, I think. Anyway. Hey, Bree Grahams, what's up? Kenny is here too. This is One Times Square. This is where they dropped the ball on New Year's Eve. Justin says, is Jim Cramer a fraud, yes or no? No, Jim Cramer's not a fraud. Look, Jim Cramer takes a lot of heat, but what a lot of people don't know, okay? Number one, Jim Cramer's like retired pretty much. He does television now. But if you actually knew his track record on Wall Street, Jim Cramer was a very, and I'm talking about very successful hedge fund manager on Wall Street. He made a fortune, okay? So his hedge funds, he actually had very good performance. Now, you know, the big meme is, you know, we do the counter Jim Cramer, right? So if Jim Cramer says to buy this, you do the opposite, right? That's kind of the meme. But I can kind of explain a little bit. I just have to put the camera down because I have to plug in my phone or else it's gonna die. But if you do some research into Jim Cramer as a hedge fund manager, I actually know people who've worked for him. Hold on one second. Sorry, I just had to plug in the phone. But anyway, probably gonna go down or the opposite way, right? But here's kind of the reality of it. Jim Cramer is a retired hedge fund manager. Does he still actively manage money now? Yeah, but he mainly manages it in like a charitable trust. And he also manages obviously his family's money. But he's a television host. It's TV. Like I think people need to understand that. And just kind of how unrealistic it is. And I'd like to give the following example, if I may, right? So I always present the following example. If you think about, if you work at a major investment bank, right? Let's say if you work on Wall Street and you're in the equity research department, okay? You're an equity research analyst at a, no. You may cover enterprise software. You may cover energy. You may cover emerging markets. You may cover, you know, European equities. You may cover Japanese equities. You may cover tech stocks, whatever, you know, on and on and on. There's some banks that have an equity research analyst assigned to one company, one stock. Okay, their job, you know, they make, you know, $300,000 base salary, and if they have a good year, maybe they get a $300,000 bonus, right? If you do really well, maybe you'll clear $1 million. But real analysts on Wall Street, they cover sectors. They initiate coverage on individual stocks. So when you call into Mad Money, okay, and there's a zillion questions, there's, you know, buzzers going off, there's lightning round and all this, it's entertainment. And I understand, right? But you got to understand that if somebody's calling Jim and says, hey, Jim Cramer, what do you think of, you know, this obscure offshore drilling company? And then Cramer says, oh yeah, I know that's, you know, I'd pass, I'd buy it. He doesn't know. I mean, he can't know. It's impossible. How do you know what's going on with every single stock in the market? It's not feasible. Now, does he probably have a good idea? Like maybe like an okay idea of what things are doing? Yeah. But he probably has core competencies in very specific sectors. So when you have 1,000 people calling in on a television show, asking him what he thinks of, you know, Transocean, what do you think of this obscure stock? It would be impossible for anybody to know exactly what's going on with that company. So that's kind of how I explain it. You know, you got to kind of take those things with a grain of salt, because not one person knows everything about the market. It's impossible. There's too many moving parts. There's entire equity research teams at the best hedge funds on Wall Street, right, to understand different stocks. So, you know, when Kramer gets asked a million different questions about these obscure stocks, of course he's not going to know exactly what he's talking about, you know. All right, we are coming up on Herald Square. Hey, Lizzie Hatch, good to see you. Patrick, New York, thanks so much for joining us, appreciate it. Felix S says, hey Tom, how are your feet holding up? You know, feet are holding up okay. Feet are holding up good. I didn't have enough time to get changed out of my work clothes, so we are banging out like 8 miles in a suit tonight. Wow, now that we're out of Times Square, it's actually quite peaceful in the city. Phil says, Tom, what's your favorite bagel place? Really? You like Essa Bagel? I actually don't like Essa Bagel at all. So there's this really, really good spot. There's 2 locations in Manhattan, I believe. No, there's actually 3 locations, I think. The one I go to is right next to my office. And the place is called Liberty Bagel. I'll say that one more time. The place is called Liberty Bagel. It's right on West 58th Street. But there's also another Liberty Bagel, I think right down here on West 35th Street, excuse me. So if you're in Midtown Manhattan, right near Penn Station, and you're looking for a really, really good bagel spot, check out Liberty Bagel. That place is awesome. I love that place. Hey, Forensic Engineering. Thank you very much for your very kind donation. This is for the shoe leather wear reimbursement. Thank you so much. I appreciate your support. And thanks for joining us. Very, very kind of you. Thank you so much. Oh, but you know what? Guys, you know what the best bagel spot, hands down, in Manhattan is? And you got to write this down, so make sure, you know, this is a video, you don't have to write it down. It's called Leo's Bagels. So L-E-O, and then Bagels. It's all the way down by Hanover Square in Lower Manhattan. When I used to work on Wall Street, on the physical street of Wall Street, I mean, my office was 82 Wall Street. I used to go to Leo's Bagels all the time. That place is really, really good, spectacular. And I was down there recently. Maybe I'll shoot a standalone video this week. They actually expanded the location, by the way. So Leo's Bagels used to be in this little hole-in-the-wall place off of William Street. And now they actually expanded it. It's pretty big. And it's really, really good too. So if you're in New York City, in Manhattan, you gotta check out Leo's Bagels. If you go in the summer, you can have a really good time because you could walk on Stone Street. You can check out the South Street Seaport. There's just so many things to do in Lower Manhattan. So yeah, check out Leo's Bagels and check out you know, Liberty Bagel. I think you'll have a good time. Speaking of Lower Manhattan, you can see the World Trade Center all the way in the distance. Coming up on Koreatown. This is a very, very fun place. But you know what? I can't wait to get back to Miami because I'm gonna shoot some more standalone videos of Mid-Beach, Sunny Isles Beach, Coral Gables. I wanna do a complete walking tour of the University of Miami. I love the campus of University of Miami. It's an awesome, awesome place. Where else do I wanna go? Coconut Grove, I'm not sure if anybody's familiar. Coconut Grove's an awesome place. Very fun. And who knows, maybe I'll make it all the way up to Hollywood, Florida. We could head up there through Fort Lauderdale. All right, let's head over to the east side of Manhattan. We'll walk through Koreatown. Now, remember what I said at the very beginning of this live stream? It's supposed to be 60 degrees out on Wednesday and Thursday. On Wednesday and Thursday, it's supposed to be 60 degrees. So you're gonna see so many people out in the city. It's gonna be crazy. You're almost not even able to walk. Sunshine after rain says you got to come down to New Mexico. I'm not opposed to that. I want to travel the US. I really want to go to California. That's the state that's kind of like on the top of the bucket list. Particularly Southern California. Right, San Diego I'd like to visit. Anywhere it's sunny and beautiful by the ocean. That's where I want to go. So Southern California is probably top on my list. Anybody here in the chat from Cali, California? Any recommendations on Southern California? A man also says, hey Tom, do you use the Bloomberg terminal? Is it very costly? Yeah, I use it. It's about, I think, like $30,000 a year, but I don't pay for it because I live in New York City. And you could just use it at the New York Public Library for free. So instead of writing Michael Bloomberg a check for 30 G's, I just go to the library whenever I need it. And I don't really need it that much. But I do use it, let's say, once a week. Something like that. Oh, Angela, this is me currently watching from Southern California. Awesome. Ah, B Cruises from Laguna Beach. Yeah, I'll have to compile a list of recommendations. I'm not a big winter guy. Hey, Techno Pink says hello from EY, Dominican Republic. What's up? That's another place I'd love to go to, the Dominican Republic, the DR. A big Dominican population here in New York City too. Ah, Les, I grew up in LA. Very cool. Yeah, never been. I would really, really enjoy it though. At least I think I would. I think I'd enjoy Southern California. Regardless of what the media says. All right, guys. Well, we're coming up on the 2-hour mark. I'll leave you guys off with this beautiful view of the Empire State Building. If you enjoyed the live stream, consider subscribing to the channel. and clicking the like button. We'll be back tomorrow at 8:30 p.m. Just a reminder, if you want to subscribe to our free investing newsletter, we send it out every other Thursday at the market close. We're going to be sending it out this Thursday, so do not miss it. Go ahead, scan the QR code on your screen and punch in your email, and you will have access to our Substack. We publish every other Thursday. We talk about the US equity markets, fixed income, all of New York City real estate if you want to see some of our listings. And if you're looking to buy or sell in New York City, feel free to work with us here at the Kirsten Jordan team at Douglas Elliman. See you guys tomorrow. Lena Sandoval, Mohammed, Crypto Meme, Meg, appreciate it. Hang with Mark Mom, Austin City Limits, Kevin D, DM, Joe C, Patrick New York, always a pleasure. AAF10, Les, appreciate it. Always a bull market somewhere. You just need to know where to look. And I will see you all right back here tomorrow. Take care.